Let's give everyone a few more minutes to join in. Again, I see lots of familiar names. Perfect. How is everyone doing this morning? If you can hear me and see me well, please put the comment in the chat box so that I know it's working out well before I roll out the webinar. And let's see if you can share my screen and let me know in the chat box if you can see me, hear me well. Oh, hey, Ron, good to see you. Hey, Tina. Hello, Brad. Hello, Jay. Hey, Ashley. Perfect. Perfect. I like to see all these messages. I feel like I'm talking to these live people, not just talking to myself in front of the camera. Well, thank you everyone for joining me today for another webinar. I apologize that we haven't been able to do as many webinars as we have done in the past because of the heavy tax season and the nature of our industry, as you all know. Let's give out 2 more minutes for other participants to join in. We had more than 95 people join in and register for this webinar today. So this is kind of one of the very big webinar, I would say, where we are going to talk about $28,000 in terms of employee retention tax credit, which is even bigger than the PPP loans. So let's give a few more minutes. And while we are waiting for the other participants to join in, just a couple quick housekeeping items here, that if you have a question which you would like to be answered live today towards the end of the webinar, make sure to post a question in the Q&A section of the webinar. Depending on whether you're joining this webinar from your laptop, MacBook, from your laptop, cell phone, or tablet, you will see up or down one of those 2 options for Q&A. For if you want to share any feedback or anything like that, put the comment in the chat box. If you try to raise your hands, I'm not really familiar with that option and identifying have to respond to those raised hands yet. So I apologize on that side. Without further delay, let's start this webinar. And a little bit of disclaimer before we dive deeper into our presentation. The materials in this presentation has been prepared by and is the property of KB Tax Advisors CPAs. All content, including images and impressions, are protected under the U.S. intellectual property and trademark laws. Any reproduction or dissemination of any element of this presentation without prior written consent from us is expressly prohibited. Before taking any action based on this information, I strongly recommend that you consult with your professional accounting advisor about your specific situation, as some of this information and its interpretation by us may be inaccurate or incomplete. We will receive updated guidance from the Treasury, SBA, and IRS soon on many of the changes that are following with the information. And as we all know, it's been quite a bit of roller coaster since last year, and a lot of things are changing even after the fact that the law is passed. So just a little bit, I want to step back. It's March 2021. And I was kind of reflecting back last year around the same time, March 2020, the lockdown was announced. Around this time, the things were kind of, that's where things started, about the pandemic. And many people thought it's kind of a short thing, short time, a lockdown, and we will be back and live and running, doing business within next few weeks, months. Well, it's been almost a year. and still the economy is not back to normal for many of the businesses. So, whether you like it or not like it, I think what best piece of advice I can give, this money has been issued in the economy, or has been provided for the benefits of the business owners. Take the advantage of this money as much as possible. Whether you take the advantage of this money or not, one way or the other way, we will all be paying it in future. So why not take the advantage of this? As long as you're qualified and as long as you're eligible. So make sure you get the maximum benefit out of this disaster relief money, which has been issued in the economy and available to all of us, right? So just want to go over that. So the employee retention tax credit, the secret jewel of COVID relief. This is something which is not spoken by many accountants. Many business owners are not even aware about this. And just to give you a little bit of idea why it says, when it says here tax credit, when we say tax credit, it means dollar for dollar refund. Okay, it's not a deduction, it's a credit, which means whatever employee retention tax credit you're eligible for, you will get 100% refund from the IRS for that credit amount. So it's a huge deal. So diving deeper in here, what we are going to cover in our webinar today is the overview of the ERTC. You might hear me saying ERTC or Employee Retention Tax Credit. It all means the same. What are the eligibility criteria, requirements, and limitations for both 2020 and 2021? How to maximize your ERTC in light of PPP forgiveness and retroactive provisions pertaining to the employers who received PPP loans, law changes in 2020 versus the first 2 calendar quarters of 2021, or I should say the whole year of 2021, not the first 2 quarters, and new update from the SBA, hot from the press, which is, we have got this update yesterday. And this is about how to get an EIDL loan of more than $150,000. I know initially it should have been $2 million. And then SBA fought back with the CARES Act and reduced that $2 million to $150,000. Then, another bill came in and said, okay, no, business owners should be given $150,000 or 6 months, whichever is higher. Back in November, back in February 2021, SBA came back and fought again, changed the rules again. Now, this time, SBA came back again and agreed that with the American Rescue Plan, which was just issued in March 2021, that SBA is willing to provide higher EIDL loans. So we are going to do a little bit of a teaser announcement on that as well. So stay tuned until the end of the webinar. We have helped many business owners with this disaster-related funding. So we are very familiar with the process. And just a little bit of a nutshell, how much of an impact we have done, with the small businesses on the EIDL side, we have helped business owners borrow up to $31 million collectively so far from last year in 1 year. With the PPP, on the PPP side, we have helped our clients get up to $2.1 million. This is not a small amount. This is a huge one. And on the PPP forgiveness side, almost $1.5 million of PPP loan has already been forgiven, and our team is still working on the rest of the money as well. As far as the state and county grants, which many of the business owners are not even aware about, we have got about $392,000 to our clients in terms of state and county grants. And for ERTC, which is almost new, we have got about $281,000 in last few months in terms of ERTC credit. So we are very familiar with the process, and we do deeply care about the small business owners. And being a small business owner myself, and being a daughter of a small business owner, I totally understand and empathize what struggles, what problems you all go through. So we want to make sure as much support we can provide you through these webinars and guidance. We will continue to do so. At times, if webinars are difficult because of our hectic schedule with the tax season, we kind of make sure and update, send out updates on our social media channel as well as a YouTube channel. So if you're not subscribed to any one of those platforms, make sure to subscribe to the social media channel as well as our YouTube channel, because some of these updates you don't want to miss out. So what is employee retention tax credit? Well, the section 9651 defines, has the provisions for the employee retention tax credit. And this credit is considered a full refundable payroll tax credit. In the past, it was only available to the taxpayer who either had their business fully or partially suspended during at least one quarter in 2020, or had a drop in gross receipts for quarters in 2020 when compared to the quarters in 2019. Those were the requirements in the past. And it was only restricted to the 2020 tax year, and that's it. And in the past, with the CARES Act, the ERTC only applied to the wages paid after March 12, 2020, and before January 1, 2021. As I was saying, it was only restricted to the that particular year. But with the new bill, there is now 3 different types of ERTC credit. One, which is Section 206, which is only eligible for 2020 calendar year. Then there is Section 207, which is eligible for 2021 only. And then there is a Section 302, which is applicable to both 2020 as well as 2021. And it is disaster-related instances only. It's not specifically related to the COVID, but any kind of disaster-related instances only. So I'm going to go into a little bit of a deeper, on all of this, what credits are available for 2020, what credits are available for 2021, and let's dive on that. So for 2020 calendar year, the ERTC amount is a little bit different than the ERTC available for 2021. And the amount available in terms of the credit for 2020 tax year is 50% of the wages paid per employee, maximum of $10,000 in wages annually per employee, which could not exceed more than $5,000. So when we say 50% of wages paid, it could be either $10,000 wages or whichever is lowest, take 50% of that amount, which is eligible as an ERTC credit. Now that is only for 2020 tax year. In addition to that, when I go into the next few slides, you will see that you have the option to get the credit for 2021 in addition to this $5,000 per employee. So it's $5,000 per employee, up to $5,000 per employee, depending on how much wages were paid for 2020 tax year. Changes to the 2020 credit, employers can take the PPP loan and ERTC at the same time. However, you cannot use payroll wages paid for PPP, the same wages, same period for the ERTC calculation or vice versa. So say, for example, you got the PPP forgiveness. You received the PPP loan and you got the PPP forgiveness for second quarter of 2020, which is June, July, August. You cannot use the same period wages for claiming the ERTC credit. So if you are someone who has attended our prior webinars, you can go back and relate to it. I kind of was emphasizing, do not apply for the PPP forgiveness because it could impact or jeopardize your ability to get more disaster-related funds. So, that's where, this is what I was trying to say. If the PPP loan forgiveness is not done correctly, or you are using the wrong wage period, it impacts your eligibility to get the ERTC credit. Now, what change, some of the changes that were made after the fact to this ERTC section 206, what it says, employers can now include allocable healthcare costs to claim the credit against the included wages as well. This includes employers who only paid healthcare cost to furloughed employees as well. All other changes are consistent with the ERTC released in March 2020. Now, notable characteristics of this ERTC that it provides a payroll tax credit for qualified wages paid to the employees, can now be applied retroactively by first draw PPP recipients as well as by second draw PPP recipients. So if you never got the ERTC before in 2020, you can go back and retroactively apply for it, and you can receive the refund for that. Now for 2021, what change was done was this 50% was increased to 70%. So what it means, the cap on the wages remains $10,000. So up to $10,000 wages paid to an employee, you get 70% of that money, of that amount as a credit. So for 2020 tax year, you were getting $5,000 credit per employee for the whole year. For 2021, the 70% of $10,000, which is $7,000 cap, applies to every single quarter separately. So if you calculate $7,000 per quarter for the whole year of 2021, that's $28,000 in credit. And cannot take into account wages paid with the PPP funds, which is exactly same as before. A little bit added in here, I would say, typo in here, this was replaced by the American Rescue Plan. Initially, the intention was that, we will get the credit up to 70% for first two quarters of 2021. And then the American Rescue Plan came in and they changed it that, they approved quarter 3 and 4 of 2021 as well for the ERTC credit of $7,000 per employee. So let's take an example here. If an employer has 10 employees making $40,000 per year in terms of salary, which is $10,000 per quarter, gross receipts are down by 20% in 2021 as compared to 2019. Remember, when we are doing this quarter over quarter comparisons, you are comparing with 2019 tax year, not going back to 2020. You're comparing with the 2019 tax year. Now, if the business was not in existence in 2019, you compare with the first quarter that the business was in existence. So there are different calculations for the new businesses that just opened up after the pandemic had started or was somewhere in the limbo, and there are new provisions for that. So gross receipts are down by 20% in 2021 as compared to 2019. What it means, 10,000 times 70%, which is $7,000 per quarter per employee available in credit. Where to apply for these credits? So if I can, reflect back, because this kind of questions, many people get confused. So PPP loan was supposed to be applied with the bank. Okay, even though PPP loan is issued by the SBA, banks are the one who is approving this PPP loan. You have to go through the bank. EIDL loans, you have to go through the SBA website and apply through them. The first EIDL loan I'm talking about, which was for up to $150,000. Now, EIDL grant, which was available as $10,000 EIDL advance, again, that was required to be applied to the SBA website initially when the program rolled out. And now this new targeted EIDL advance is available only by email invitation, which means SBA will send you an email if you're eligible to apply for, if you're eligible to get this $10,000 in advance. And the beautiful thing is the PPP loan and the EIDL grant, none of them are taxable. So it does not reduce your tax deductible expenses, and you're not paying any taxes on either one of them. So you must apply by the, for the targeted advance as well. If you received an email invitation, 2020 ERTC has to be applied with the IRS by amending your 941 payroll tax form. It is your quarterly payroll tax form. Amend the 941 by, the form that is called, the amended form is called 941X. And it's kind of a little bit upsetting, but most payroll companies are not helping out business owners with the ERTC calculation, which is very, very complex. And I've heard many payroll companies, they are not even helping out with the 941X. So even if your payroll company could be helping out filing the 941X, I would not recommend using them for this 941X issues because the calculation is so complex. If you have not done anything correctly, and after the fact, if you have to make more edits or more changes to your 941X, you are stuck with the customer service loophole with the payroll company, which is kind of more time consuming than working with your accountant directly. So the next one is 2021 ERTC. There are two options if you are applying for the ERTC ahead of the time. So like say let's take the example of this quarter 1 of 2021, you can request the advance money from the IRS filing the form 7200, which is proactively, rather than paying the taxes to the IRS, at the end of the quarter and then requesting refund, you can proactively request the advance and not remit that amount of taxes ahead of time. Or if you are not familiar, how to do it, or you, for one or the other reason, you did not apply for 7200 form, then after the quarter has ended and after you have filed your 941, you can file 941X, which is amending your quarterly payroll tax return. So that's where the mechanics are. But in a nutshell, ERTC have to be applied with the IRS. And all the others, EIDLs, SBA, PPP with the bank. The American Rescue Plan officially extended Section 207 ERTC for 2021 to Q3 as well as Q4, which was previously restricted to Q1 and 2 of 2021. Again, the amounts are going to remain the same, $10,000 per quarter in wages, up to 70% of that wages, again, $7,000 in credit amount, or the actual wages paid, whichever is lowest. And they also added new eligibility criteria for Section 207 for the recovery startup businesses. So what it means, if it is a business which began carrying on any trade or business after February 15, 2020, for which the average annual gross receipts of such employer for the 3 taxable year period ending with the taxable year which precedes a calendar quarter for which the credit is determined does not exceed $100,000, $1 million, you are eligible to get the credit as well. I know this language is very complicated, and intentionally I kind of copied and pasted this language here because many people, they kind of think like, no, the ERTC is very simple, very easy. But the interpretation is very, very complicated, okay? So what it means here, if it is a business which began carrying on any trade or business after February 15, 2020, initially new businesses were not eligible at all for any of the disaster benefit. And government realized it, Congress came back and made an update with the ARP saying, okay, if you're a new business, we understand you are suffering not any less than any other business. So we will give you the ERTC eligibility. You can apply for the ERTC as long as your gross receipts are not exceeding $1 million. And it does not allow you to get more than $50,000 in credit per year for this type of business. So the cap on this credit is capped at $50,000 per year for this kind of businesses, but it's still not bad. I mean, even if you can get $50,000 for new business, that's not bad at all. The credit allowed by subsection A with respect to any calendar quarter shall not exceed the applicable employment taxes, reduced by any credits allowed on sections 3131 and 3132 on the wages paid with respect to the employment of all the employees of the eligible employer for such calendar quarter. So what it really means, that the credit cannot exceed more than the applicable employment taxes for 2021 ERTC. Okay, this all I'm talking about is the 2021 ERTC. Because if you're requesting an advance from the IRS by filing a form 7200 form, you cannot request a credit for more than what you have, your employment taxes are. The taxes imposed, the employment taxes, again, those are defined under Section 3111B and Section 3221, subsection A. So I don't need to go into those details, but in a nutshell, it would be restricted to 6.2% of the wages, which would include your FICA taxes and all. The eligibility overview: business needs to prove their business was either shut down by the government fully or partially, or experienced a drop in revenue year-over-year gross receipts. So when we say year-over-year, quarter-over-quarter comparison. So quarter 1 of 2021 versus quarter 1 of 2019, as long as there's a drop in revenue by 20%, you're eligible for the ERTC. So what it really means, we still have time for before we end this quarter. And if you are at, when you compare your revenue for 2019 versus 2021 for the quarter 1, and if you see there is a drop in revenue like 17, 18, 19%, you can control your revenue to establish that drop in revenue up to 20% and get this credit. It's totally available because, and if you're not eligible for this quarter, the next quarter is in your hands. So if you are in that borderline, where you are tracking for revenue, 80%, 90%, you can control your revenue in a way that there is a drop to be eligible for this credit. So if you're in the borderline, I would recommend, but if you're not in a borderline, don't worry about it. If your business is thriving really good, not to worry about this credits at all. So the shutdown by the government is further explained because there is so much of ambiguity with this ERTC. IRS have sent certain what we call clarifications, and we are still receiving more and more clarification from the IRS as well. Shutdown by the government includes orders from an appropriate governmental authority limiting commerce, travel, or group meetings for commercial, social, religious, or other purposes due to COVID-19. And if the employer only applies because of the shutdown, which is test 1, then the eligible quarter will only get credit for the wages paid during the period when the business was shut down. So what it means, if your business was shut down on March 13, 2020 through the end of June 2020, even though that period falls between the two quarter 1 and quarter 2, you don't get the credit for both the quarters. You only get the credit for March 13 through the end of June. That's it. But you will have to amend your 941 for quarter 1 as well as quarter 2. So that's kind of a little bit complicated. But if you are eligible to get your ERTC because of the shutdown reasons, it's based on the shutdown period, not based on the quarter. But if there is a drop in revenue, even though you got a drop in revenue in April and May, but your June revenue is absolutely fine, you still get the credit for the whole quarter, even though your revenue was only down for 1 or 2 months. Gross receipts will be applicable for any quarter of 2021 in which gross receipts is less than 80% of the same quarter in 2019. If a business did not exist at the beginning of the same quarter of 2019, the same quarter in 2020 is substituted. Gross receipts test also is now allowed looking at the immediately preceding calendar quarter and comparing that quarter to the corresponding quarter in 2019. So what it means that for immediately preceding calendar quarter and comparing that quarter with the prior to the same quarter in 2019 can also be used. So gross receipt test, there are two. Quarter 4 of 2020 versus quarter 4 of 2019. That's one way to establish your gross receipt test. Or quarter 3 of 2020 versus quarter 3 of 2019 to claim the credit for quarter 4 of 2020 as well. So there are two ways to calculate this credit. And it's very important to maximize your credit available. Now, say, for example, you meet the test in one of the quarter where you have 50% drop. Just take it easy. Like quarter 3 of 2020, you have 50% drop in revenue. You're eligible for ERTC for that particular quarter. At the same time, you're eligible for the ERTC credit the following quarter, which is quarter 4 of 2020, as long as your revenue does not increase up to 80% compared to the quarter in 2019, same quarter 4 in 2019. So the 50% drop in revenue, that particular quarter qualifies, and all the following quarters will qualify as long as your gross receipts have not reached up to 80%, or it's not exceeding more than 80%, you're eligible for all the other quarters as well. So it's kind of, I'm kind of getting, where you see this, confusion and all, right? So let's look at this example. 2019 gross receipts for Q1 is $100,000. And for that same quarter in 2021, it's $80,000. So this quarter is eligible because of 20% drop in revenue. If 2019 gross receipts for the quarter 2 is $100,000 and 2021 gross receipts is $50,000, you are still eligible because there is 20% drop in revenue. Now look at this quarter, especially quarter number 3. The drop in revenue is not necessarily 20%. The revenue here is $82,000. But because there was a drop here of more than 50%, this quarter is automatically eligible, if that makes sense. And now here, there is less drop. Again, it's only about $85,000, and it has surpassed the eligibility of having less than 20% reduction in gross receipts, and therefore that quarter is not eligible. So, most people, they kind of stop here, or they will stop at this quarter, forgetting about that this quarter is also eligible. And this is exactly the same applicable in 2020 tax year as well. Now that we have determined the eligible quarter, note that it does not necessarily mean that the wages for the credits are eligible as well, okay? Because if you have more than 500 average monthly full-time equivalent employees for 2019, only wages paid to an employee during an eligible quarter to not provide services are eligible. So what it means, if you have more than 500 employees, any wages paid to the eligible employees in that eligible quarter who did not provide services are eligible for the credit, unless your revenue is down by 90% year-over-year comparison. If you have less than 500 average monthly full-time equivalent employees for 2019, all the wages paid to an employee during an eligible quarter can be approved for the credit, whether they worked for you, whether they were not working, whether the employees were sitting home and you were paying them wages, all of them are eligible. And even if the employee is currently working with you or not working with you, you're still eligible. Also remember that if the employer only is applicable based on test 1, the test 1 is the shutdown of the operations fully or partially, then the credit can only go towards the eligible wages paid during the shutdown, not the whole quarter as I was saying it earlier. So let's take here another example. This is again for 2021 tax year, not for 2020. So we have here 3 employees, Sarah Jones, Jimmy Thompson, and Angela Gomez, and wages paid as you see here. So eligible quarter and eligible wages quarter 2, they are eligible, yes, per test 2. If they have credit, if they have taken any credit already, no, which means they are eligible now. So 50% of this 4,000, I'm sorry, 70% of this $4,000, which is $2,800 eligible for the credit. If it was for 2020 tax year, same wages, you will multiply this number by 50%, not 70%. So this one is multiplied by 70%. Jimmy Thompson, again, they did not take any other credits before. They did not use this wages for the PPP forgiveness or anything at all. So when we take this, her wages, his wages are $16,000, but this wages for the ERTC are capped at $10,000. So 10,000 times 70%, the eligible credit amount is only $7,000. For Angela, $9,000 in wages. And last year, the credit was taken about $5,000 in wages. So only eligible amount here is 69,000 times 70%, which is $6,300. So last year she got $5,000 in credit. For her, the employer got $5,000 in credit plus $6,300 in credits. So between 2020 calendar year and 2020 and 2021 calendar year, they got $11,300 in credit. Yeah, it's kind of gets very confusing. 2020 tax year, 2021. Yeah, so between the 2 year, Angela was eligible to get $11,300 in credit. And look at that amount. That's substantially high amount to get in terms of credit. Isn't that? Note that there are some FAQs on the IRS which are not yet updated, but they keep releasing more and more FAQs. Again, interpreting some of those FAQs is also very challenging because every single FAQ will refer to some tax section code, maybe to the CARES Act or to the other guidelines and stuff like that. So we are kind of trying to simplify as much as possible. We are hoping the IRS will come out with the new 2021 guidance incorporating the American Rescue Plan changes to it soon, but we have not received any timeline or anything like that from the IRS. And in the guidance that we have so far, what IRS has is the eligible employers, aggregation rules, governmental orders, full or partial shutdown, and a lot of things. So if you have already got the PPP, and you're talking about the ERTC, now you can claim both, as I mentioned in the earlier slide, but not using the same wages and the same period. The new guidance now permits an eligible employer to elect not to take into account certain qualified wages for the purposes of the employee retention credit. So what it means, if you got the PPP loan, and you are requesting for the forgiveness of the PPP loan based on 60% for the payroll, 40% for the other operating expenses. So out of the 100% of the payroll expenses, only 60% are qualified for the forgiveness. Rest 40% of the wages can be used for the ERTC for the same period because you never got any forgiveness for that 40%. So you can get for that 40% of the payroll wages, use that for the ERTC, and you got your 100% of the wages covered, right? Have to maximize your PPP loan and the ERTC. So determine, first of all, what is your eligible quarter? Okay, once you have determined which quarter you are eligible for based on which test, which means whether partial shutdown or full shutdown, or because of the drop in revenue, because of either one of the tests, which quarter you are eligible for. Once you have determined that, determine what are the wages that are going to be eligible for the ERTC. For the PPP, then calculate the total amount of payroll needed to allocate towards only the 60% of the payroll cost, not the 100%, only 60%. Use the payroll funds that are not eligible for the ERTC to go towards the 60% bucket of the PPP. So what it means, that the wages paid to an employee in excess of $10,000 limit on ERC qualified wages for 2020. Wages paid to the employee not eligible to be used for ERC purposes due to the related party rules. So not all the employees are eligible for the ERTC credit. Certain employees, which are the related party, what it could mean, owners of the business, not the owners of the business, but the owners of the businesses, kids, son, daughter, relative, in-laws, parents, Their siblings, if any of those people are working in your business, they're not eligible for the ERTC credits at all. The S corporation owners who owns more than 50% of their business, they're not eligible for the ERTC credit either. So if you have a situation where you own an S corp, 50% is yourself and 50% is your spouse, by default, both of you are disqualified for the ERTC credit, which means you cannot apply for the ERTC credit for yourself, but any other employee you have on the payroll, they could be eligible for ERTC. Now, these owners of the S corp, which are husband and wife, 50-50 owner, they can use their wages towards a PPP loan and use their employees' wages to apply for the ERTC credit, which is totally fine, even though it could be the same period, but you're using different employee for different benefits. Wages paid by a larger employer to the employees performing services over 100 employees, they are not eligible either. Payroll costs such as retirement plan, payroll taxes paid to the state or local governments are not eligible for the ERTC credit as well. So a little bit of a flow chart here. I would give special credit to two of my team member, Ali and Taruna, who kind of worked on this flow chart to make it a little bit simplified. And, if you want a link to this flow charts, do let Taruna or Ali in our team know, and they will be more than happy to share it. So were your operations fully or partially suspended due to the government mandated shutdown? Yes. Then you are eligible for the credit, and there are more criteria to it. If it was not shut down because of the government order, but you voluntarily decided to shut down, you're not eligible. Unless there is a drop in your gross receipts, quarter over quarter comparison with more than 50%. Then you're eligible for the ERTC credit as well. So that brings up here, yes, if you have employees 100 or less in 2019, aggregation rules apply. You're eligible for that particular quarter. If you don't have 100 or less employees, did the employer pay employees who did not work during the quarter? If yes, eligible for this quarter. If you did not pay anyone, then not eligible for that quarter. So this flow chart goes into very detail. Let our team know if you would like a copy of the flow chart. I think I explained majority of this in previous slides. We don't need to go in detail on this. Let's dive on the unannounced nugget of the webinar here, because this was something last night and it was so good to not announce it today. The oversight of SBA's COVID-19 relief program. We received this update from the live committee meeting that the SBA had yesterday. SBA is extending the initial $150,000 cap on the EIDL loan to $500,000. So what it means, initially SBA had capped the EIDL loan to $150,000. Now you're eligible to get up to $500,000 in EIDL loan. Isn't that amazing? Put some comments in the chat box if that's something your business can, use that money, and that will be a good pot of money available to sustain or survive through this disaster period. Looks like no one needs this extra money. I don't see any comments in the chat box. Anyone who needs this $500,000 in EIDL loan? Oh, yeah, I see that. Yeah, so many people. Yeah, Jasmine needs it. Amul Patel needs it. Nilam needs it. Yeah, absolutely, right? This is a huge help. And, I know that many of the attendees we have today are hoteliers. And, the hoteliers are kind of a seasonal business. Summertime, it's your booming time. Last summer season, you lost a lot of business. You didn't make enough of money. And winter is already slow for many of the hoteliers, depending on what area of the what part of the country you are in. And if next summer, which is this summer, if you don't generate enough of revenue, it will be very tough to survive for the next winter. So if you are on the fence whether you need more money or you don't need money, and if you're eligible and you get the invite for this $500,000, you must take it. Not just that, There is one more big, announcement that I would like to do here. So initially, SBA came back and said, okay, we will give you $150,000 in EIDL loan for the first 12 months. There's no installment payments at all. SBA realized, and Congress also realized, that how business owners have been impacted through this pandemic. They have decided to extend the 12-month window to 24 months. So what it means, no repayment of the loan required for at least 2 years. So not only they are giving $500,000 extra money, I wouldn't say $500,000 extra money, because if you got 150 already, you will only get 350, not a full 500. So let me clarify. It's going to be 350 and nothing more than that. So altogether, whether we say first EIDL or this extended EIDL, altogether, it cannot exceed more than $500,000. This is after the SBA changed the ruling per their FAQ on February 4, 2021. So in November 2020, SBA said, we will give you 6 months of working capital or $150,000, whichever is higher. Then February 4, 2021, SBA came back and said, nope, we will only give you up to the max of $150,000. Forget about 6 months of working capital, the maximum. They said, no, we will give you lesser of $150,000 or $6,000. Now, SBA came back and they are saying again, you know what, we will true up the small businesses and we will give them 24 months of working capital or $500,000, whichever is lower. Okay, so that's what, they are saying now. ARP has granted the true up to those small businesses that only received $1,000 of EIDL grant instead of $10,000 of EIDL grant. And the SBA has agreed to it, which is a big deal. SBA agreeing on something, that's not easy. If at all, SBA will change the rules and kind of step back. Well, and again, I don't want to hold your hopes too high, okay? When this program rolls out on April 6th, as it says here, April 6th, this program is supposed to roll out. If you are one of those luckier person and you get that email from the SBA to apply for this $500,000 loan, do not take chance to sit on that email for days or weeks. Just apply for it right away with the proper accuracy, okay? Because many business owners do know here, many people thought applying for the EIDL was so easy, and easier things are the ones which are very easy to mess up. And there are so many businesses who have not received the EIDL loans yet from the first round of $150,000. They are the one who knows how tough it could be. So if you're not 100% sure how to apply for this $500,000 of extra working capital here, get hold of your accountant or reach out to us. We will help you on this. And I'm assuming we don't have much clarification on this yet, but I'm assuming it's going to be again by invitation only. The way SBA did it with the targeted EIDL advance, if you received less than $10,000 of EIDL grant, they will kind of send you an email if your business is eligible to apply for the higher grant. And it was by invitation only portal, and they will assign you a specific loan number, which is different than your initial EIDL application number. And based on that, they will allow you to apply for the EIDL grant. So I'm assuming this is going to be something similar to that. They will be asking more information. And as you all know, the PPP round number 1, SBA did not ask as much of information as they are asking for PPP round 2, because there have been a lot of things. SBA is learning something new, from the first round of PPP, and lots of fraud, and many people took disadvantage of this PPP loan money as well. So the second time around, getting hold of the PPP money was very, very challenging for the many business owners. So the EIDL, getting this $500,000, I'm assuming it's going to be very challenging, and SBA will ask a lot more documents than they asked in the first round itself. SBA will be sending emails to only those that are low income communities, informing them of the increase in the EIDL advance or not. Priority 2, so there were SBA kind of sends out these emails in phases. First phase, second phase, third phase. The first phase will be low income communities, and then there will be priority 2 phase, which are those small businesses who did not have funding or who ran out of funds in July 2020. They will receive an invite as well. So, there was a time period when whatever money that was allocated per CARES Act to the EIDL program, that money ran out, and then SBA said, okay, we are not giving out any more loans because we don't have any money. Or they said, we don't have any more money available for the targeted advance, so we are not giving out any money. Now SBA is going to come back and send out the emails to this business. It's okay, we have received this money again. You're eligible for the advance, but you have to apply for it. So there are still many issues that we have to clarify when the business had a change in ownership from first PPP to second PPP. How to handle this. SBA does not have much of a clarification on this. So we are waiting for getting more clarification from the SBA. And as we have more clarification, of course, we will reach out to you as well. So stay tuned because this is a big deal. If you are not following us on the social media channels, YouTube channels, make sure to subscribe, get on our newsletters as well. And if you need help, reach out to us and we are more than happy to help you out, navigate through this disaster funding as well. I think we are coming almost towards the end. If you have any questions, and if you would like to schedule a complimentary strategy session with us, Daruna can provide you the link, or it will be sent out in the webinar follow-up. We will be helping you with the COVID and pandemic relief disaster benefits, tax planning strategies, and to see if you qualify for our CFO services. Again, this strategy session is complimentary, and you definitely do get a good worth of information, valuable information during this strategy session as well. The next webinar to be announced soon. And before we hop on to the next webinar, let me go over some questions that are being answered here in this webinar. What about pre-revenue companies? It's an anonymous attendee. I kind of need more information on your question. I'm not sure if I'm understanding your question here. What about pre-revenue companies?
I'm assuming that it will be a company in I think in initial or a startup phase.
Okay.
So where there will be an issue of sales comparison over quarter or year over year.
So if that's what it is, okay. So if that's what it is, I would say the first quarter your business was active or started generating revenue, that quarter would be compared with the 2020 other quarters of 2020 and 2021. That's what my understanding is. I know for sure this kind of companies, who did not generate any revenue in 2019, they are still eligible. But reach out to us. We will keep an eye on this kind of questions, because this is definitely we kind of like to do some further digging in on pre-revenue companies. And if we get more clarification from the SBA, would be more than happy. I'm pretty sure there was some clarification, but I don't recall top of my head. Believe me, it's a lot of pages to keep in your brain on this.
But there must be some payroll expenses to become eligible for ERTC.
Yeah, that's true. Can owner's payroll qualify for ERTC? From Manish Patel. Well, thank you for asking this question. And my response to that depends, okay? So if you are an owner of the business with more than 50% ownership in the business, you're not eligible for the ERTC credit. If you are an owner in the business with less than 50%, you are eligible for the ERTC credit as well. The next question from Nimesh Tucker, does Q1 2021 compare to Q1 2020 or Q1 2019 for ERC eligibility calculation? So whether you are applying for the ERTC credit for 2021 tax year or 2020 tax year, whichever one, you will always compare with the same quarter in 2019. Okay, so 2019 Q1 versus 2020 Q1, or 2019 Q1 versus 2021 Q1, because before this pandemic hit, 2019 was your regular business year, which kind of have all the revenue. It's kind of a little bit sad that if you were new in business in 2019 or around that time period or in 2020, the things are a little bit challenging. But I like the fact that, you know, Congress realized this and they are willing to provide the ERC credit to the new businesses as well, which is a good thing. Next question is from Divya Patel. My Q1 of 2021 is 50% less on gross receipt compared to Q1 of 2020, but not compared to 2019 due to we had a partial shutdown for renovations in 2019. Yeah, unfortunately, you would not qualify for Q1 of 2021 for the ERTC. I would be curious if IRS issues more clarification on that, but looks like 2019 you were operating at a partial capacity because of partial renovation or anything going on in the hotel. I'm assuming this is a hotel, or whatever business it is, and you had some partial renovation going on. So you were not operating at a full capacity and your revenue in 2019 Q1 was low. But 2020 Q1, you were operating at full capacity and your revenue was pretty good. So yeah, you're not eligible for that one.
I'm curious how 2018 compares. And if there's a documentation that can be maintained or prepared, establishing the case. I'm not sure, but just a thought out there.
It's
But
an IRS, you're not fighting with the SBA. IRS is very difficult to deal with than the SBA. So even if 2018 quarter was perfect, yeah, no, we have to wait if IRS issues more clarification on that one, unfortunately. We have another anonymous attendee which says, I missed the first 30 minutes of this webinar. Has this been recorded? Yes, I believe this webinar is recorded. Reach out to Taruna and she will send you the recording of the webinar. Hitesh Patel is asking next question. I bought the property in mid-March 2019. Which quarter should I compete for 2021 ERTC? Second quarter of 2019 or first quarter of 2020? You will be using second quarter of 2019, you know, because that's your first full quarter when you have the business, you know. So you will be comparing second quarter of 2019 versus any quarter, second quarter of 2020, or second quarter of 2019 versus second quarter of 2021. Manish Patel, I have a business that we started in July 2020. Can those payroll details qualify? Yeah, I mean, you started this business in July 2020. Yeah, this new guidance that has come for the American Rescue Plan, you are definitely eligible for the ERTC, even though your business was started in July of 2020. I'm pretty sure you would not have got any PPP loans because your business was new and it was after the pandemic date. So you would not have got the PPP loan, but you are still eligible to receive the ERTC loan, ERTC credit. And let our team know if you need any help with that as well. So I think we got all the questions covered on that side. And let's see, I'm going to go over some questions that are posted in the chat box. Okay. Amol Patel is asking, hi Manal, we have not applied for any ERTC of 2020. Can we apply now? Absolutely, yes, you can apply. Have to calculate quarterly revenue. It is by the payment received date or invoice creation date. It depends on if your business is on cash basis or an accrual basis. If your business is on cash basis, then it is based on the payment received date. If your business is on accrual basis, you will get the credit based on revenue accrual timeframe. So depending on what basis your tax return is, you have been filing taxes, if you're not sure where to find your base, your method of operating this business, look at your tax return or reach out to your accountant. It should be there on that side. Last question, our business is trading. So for a quarter, our revenue may be same, but the profit margin is almost half. Can we do anything here? Unfortunately, no. With the profit margin, there are no benefits available related to the profit margin. It's all based on the gross revenue. Jasmeet Bansal says, absolutely, we have failed to secure an EIDL so far. I'm so sorry to hear that. I don't know, for some reason, this name sounds familiar, but there are.
The common restaurant.
I'm sorry, what?
It's from the Eastern restaurant owner.
Oh, yes, I remember. Yeah, we had a very good time when we came to your restaurant. And if you are someone local, we have a very good Indian restaurant in Easton, in Pennsylvania, and a very good business owner who really genuinely cares about the guest coming into their restaurant. So it's a really nice ambience. You must check it out.
More on that, he has a big heart and he helped so many families. I lost the count, but it was in hundreds or thousands of family, and they provided meals during this pandemic time for a couple of months.
Yeah, and they opened up their doors. Not only they were providing food, but they were also providing grocery items. Asking people what you want and delivering those bags to them is a big deal. So, we all know half the restaurant owners have been impacted. By the way, Jasmeet, I would like to add, if you're still on the webinar and listening to us, that for the restaurant owners, there is a special grant available. Okay, so I definitely want to make sure, because all the good things that you have been doing, you definitely need to apply for this grant. And I know your business has been impacted as well, but it's a big heart, helping out the community, even when your business is suffering, that's a big thing. So, okay, perfect. Amol Patel, next question is, we already got $150,000. Can we reapply to get more? It's not reapply, I would say, Amol. You will receive an invitation from the SBA, and by invitation, it will be an extension of your original EIDL loan. So you will not have two different loans with the EIDL. From my understanding, again, and this is how I'm interpreting, it's going to be one EIDL loan, but they will extend it from $150,000 and stretch it out to $500,000. Okay, Jasmeet is saying, Aminal, I will be in touch to discuss Aman's Easton. Okay, absolutely. Neelam Brahmabad, what if we had $3,000 advance EIDL? Are you still eligible for the difference? Absolutely, yes, you are eligible. Manish Patel, can owner's payroll qualify for EITC? I think I answered that question already. Paresh Vinci. Hello, Paresh. Nice to see you on the webinar. I know we have met on the strategy sessions before. What are the charges for you to file the ERTC? We are determining charges on case-to-case basis. So if you want to kind of send us some details as to how many employees you have and how many quarters you're eligible for ERTC, my team can give you a quote, because it's based on how many quarterly tax forms that we are amending and how many employees you have. If we own 3 businesses with the same partner, they can qualify. Then can we qualify for ERTC? As long as you have less than 500 employees, I don't see any reason why you would not. Any special deal for signing ERTC if we do it today? Any checklist that we can provide for you to file the ERTC? So the way our team has been handling on the ERTC side is, if you, we will have initial consultation session with you. And if you're eligible, if my team finds out that you're eligible for ERTC, and you engage us for those services, you will be sent an ERTC questionnaire and some documents. After we review your documents and you fill out the questionnaire based on your responses, will determine your ERTC eligibility. Before we kind of even take you as a client, we will do thorough, analysis whether you're eligible, just to respect your time and our time, because we are in the middle of the tax season. So we kind of do all of that analysis and give you the quote right away in the strategy session itself. And the next question, Ty Nugent, if we have 300 FTEs, full-time equivalent employee, do we still qualify for ERTC? Absolutely, yes, you do qualify for it. Max Tucker, I have received both PPP loans and first one has already been forgiven. We are using second one now. Can we apply for ERTC? Absolutely, yes. Oh my gosh, Jasmine is saying his current accountant is lost. I'm so sorry to hear that, Jasmine. Reach out to us and we can kind of see if we can help you. For your ERTC EIDL filing, you just mentioned about services. Does your services include to figure out how much we are eligible for ERTC? Absolutely, yes. We calculate how much you are eligible as well as file all the necessary forms. If you receive any inquiries from the IRS after the fact, we kind of help you on that side as well. I think I got all the questions covered. Let me know, Taruna, if I missed anything. I know I went a little bit over the meeting time, but thank you everyone for staying with us past the webinar time. And I really appreciate this. I hope this webinar was very helpful. Our team puts in lots of time and effort bringing this out, all this material, and at the same time making this possible. Our marketing advisors with the EMA, as well as Taruna, Ali, everyone, big thank you to all of you for supporting me on this webinar. Taruna, anything else you want to go over with?
I think we are good.
Perfect.
Following up with the follow-up email that will share all the recordings and the schedule link if you need one. So that will come handy.
Perfect. Well, until then, stay safe and be strong. Bye.
Thank you all. Bye.